Hello, Ric Komarek, Certified Financial Planner, and I wanted to share with you today an article that I just loaded to my blog titled 11 Smart Year-End Financial Planning Moves. So you can check that out. I'm going to summarize it as quickly as possible for the sake of time. But first and foremost is take stock of changes in your life. If anything major has changed, then it could be that insurance and beneficiaries also need to be updated to reflect that change. Review your income or portfolio strategy. Similarly, as I just mentioned, if your life situation has changed, then you may need to adjust your income and expenses and things of that nature. Number 3 would be to use any remaining balances in your flexible spending account. Typically, these accounts are kind of a use it or lose it situation, and they need to be done before the end of the year. Some plans allow you to roll over funds into the next year, but that's not always the case. So definitely take a look at your plan, and if you have money in that plan to spend on dependent care, transportation, medical expenses, then go ahead and get that taken care of. Number 4, carry out transactions that can lower your 2018 taxes, namely medical expenses. Are there certain medical expenses that you can deduct before the end of the year, or incur rather, so that you can deduct them before the end of the year? At this point, those expenses need to be greater than 7.5% of your adjusted gross income. If you have more questions about that, feel free to reach out to me anytime. Mind the tax loss deadline. If there are tax losses in your capital gains accounts that you want to take advantage of, then December 31st is the deadline for that. Don't miss the RMD deadline. That's a critical one because if you miss it, then they give you a huge penalty. So don't miss it. It's also December 31st. Now, the very first year, they allow you to wait until April 1st of the following year, but that's only a one-time deal. After that, it's got to be December 31st. Maximize retirement plan contributions at work. If you're able to contribute to an employer-based plan like a 401k, 457, 403b, TSP, anything of that nature, go ahead and max that out if you can. The IRS does put limits on how much you can put in, and those are $18,500 or $24,500 if you're 50 or older. In addition to that, consider contributing to a Roth or a traditional IRA as well. Again, there's income guidelines, so definitely look at the details on that. If you're in business for yourself and you want to contribute more than that, $5,500 or $6,500 if you're 50 or over, then take a look at considering a solo K or a uni K or a one participant 401k, an individual K. Those are all the same words that denote a one participant 401k plan, and you can contribute a much greater amount than the $5,500 if you'd like to do that. Consider college savings. A 529 plan allows you to put a high level of contributions into that to grow tax-free for college expenses. However, there is a catch. They're not deductible in the state of California. They are, or for federal purposes either. So just be aware of that. And then finally, we're down to number 11, which is wrap up charitable giving. Again, the deadline's December 31st. So if you want to get your year-end qualified charitable contributions in, now's the time to get those done before the end of the year. And you also may be able to do a qualified charitable distribution from your IRA if you're 70 and a half or older. And maybe I'll do a whole separate video on that because that's a pretty cool thing. If you have any questions about your income, expenses, financial planning, retirement, taxes, investments, insurance, feel free to give me a call anytime.